So there's a lot of content out there about different types of multifamily investing, right? You can choose to go down the larger multifamily, right, where you go invest in larger multifamily buildings, either as passive or active, or you can buy your own smaller multifamily properties. But investing in small multifamilies and buying up a portfolio of yourself is definitely a very great and can be a very profitable strategy to create that financial freedom that you'd be looking for. So what I thought I would do in this video is actually go through the mechanics of what it takes to build up a small multifamily portfolio, right? One that can help you achieve financial freedom through both cash flow and equity growth. So we'll talk about the key steps that you need to think about and take when deciding to pursue this strategy. So with that, let's get at it. What's going on, guys? My name is Lior and welcome back to my channel. Now, before I get into the meat and potatoes of the video, two super quick things, guys. Number one, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button. I'm putting out weekly content on all facets of multifamily investing. And number two, guys, if you've been thinking about trying to invest in larger multifamily deals, but you don't want to do the work, but you are looking for that cash flow, that consistent equity growth, my team and I offer really strong passive investment opportunities for investors just like you who can invest in our large multifamily deals all over the country. So if that's something you're looking to do, you make sure you click at the link below, set up a call with me and my team, and we'll definitely help you out. So with that, let's get right into it and talk about the mechanics of buying and building a small multifamily portfolio, right? And I think it's super doable. If you put yourself to it, to within a couple of years, 3 to 5 years or so, buy an off property where you're creating enough cash flow for yourself, right? You can easily get a couple $1,000 passive income as high as $10,000, and of course more, depending on how much you scale. You can also get a really consistent equity growth. But of course you have to be super strategic and really understand where and what you're buying. So that kind of leads me right into the first point of, the strategy you have to outline for yourself if you're gonna go down the small multifamily acquisitions is you gotta figure out and really understand your market, right? Because markets can be incredibly different, right? So for example, I live in Boston. That's where I started out buying a lot of these small multifamilies. And in Boston, it's a really expensive market, right? A 2 or 3 family is easily $800,000, $900,000, $1 million to $1.3 million for threes, right? I mean, it is a very expensive market. So on a cash flow basis, when we buy these multifamilies, maybe we're cash flowing maybe $100 to $200 per unit. But of course, you can go and be located somewhere else, anywhere else in the US, you go into much less expensive market. And I know folks that are cash flowing $500, $600 per unit per month, and even more, right? Just depending on where you go. So step number one is really understanding where's my market gonna be. It could certainly be in your backyard. You can certainly go out of state and into different markets that you're not local to, right? But you wanna kind of hit that sweet spot of where do I wanna invest based on the cash flow potential, on the equity potential, the quality of the markets, and then you can really hone your strategy from there. Now, in line with this, the next step I would think about is your capital needs, right? Your market selection is gonna have a lot to do with potentially your capital, right? Because basically, if you're gonna go invest in a really expensive area, right? Let's say you live in New York, Boston, Miami, right? Whatever it may be, those markets are obviously much more expensive. Whereas if you're going into more, second tier, smaller markets, your capital needs are gonna be a lot less. Now, the other thing you kind of want to think about this as you're thinking about capital needs, let's get into the financing aspect, right? Because with the financing aspect, what you're gonna have to think about is, how much capital am I gonna have? Does that impact the type of loan strategy I'm gonna go after, right? So for example, if you live in a more expensive area, maybe a good way to go about building a portfolio is through owner-occupant loans, right? So, when I was first starting out, buying in Boston, I didn't have the capital, put 25% down every single time. So I was able to leverage low owner-occupant multifamily loans. So I put down 5, 10% on my acquisitions, which allowed me to scale out my portfolio in a more expensive market without having that 25% down. But of course, again, the vice versa is if you're in a cheaper market, right? Maybe you don't have to do that, right? 25% down on maybe $200,000, $300,000 properties is a much more manageable number that you might have saved up, right? So, you really want to figure out your financing strategy along with your capital needs and market selection. They all kind of blend in together. Now, before we hit the next, the next kind of metric that you have to think about, which is the underwriting, one other quick note I'll talk about that kind of has to do with all of these, financing and strategy selection is you want to figure out what kind of rentals you want to go after. And what I specifically mean by that is, what kind of strategies on buildings are you going to look at? Are you going to look at rehab projects? Are you going to look at turnkey opportunities? Right? Because again, when you're thinking about market, when you're thinking about capital, when you're thinking about the kind of financing you could get in place, all of those have a lot to do with the type of buildings you're going to go after, right? So, if you want to buy fixer-uppers or, potentially multifamilies that need some work or renovations, then you got to make sure you've got the capital, whether it's cash or if you're going to figure out other sources of credit lines or whatever it may be, to actually go do those renovations, right? So, you really want to think about what's the ideal strategy that I want to tackle? What's the ideal strategy for me based on my, based on how much capital I have to deploy? And then again, really hammer down that, okay, I'm going to go after multis that need, in this market that need maybe only $20,000 of work per unit, kind of lipstick, or maybe I'm going to go after full gut rehabs because I'm really liquid, or maybe I'm going after super turnkey opportunities, right? So again, balance all these factors out. It is incredibly, incredibly important to get very, very clear about this. The next step I want to talk about that's critical is really hammer out and get good at your underwriting. And underwriting, there's a lot of resources out there. Bigger Pockets, of course, has tools. I've got my own sheets that I use and you guys can download. But at the end of the day, underwriting is key because obviously with real estate, cash flow is not, rents minus mortgage and taxes and insurance, right? There's a lot more than meets the eye that you might not think about. You have to account for things like vacancy, repairs and maintenance, utilities, right? Common utilities, snow, landscaping, trash, pest control, CapEx budgets. So those are some of the line items that you really got to think through and really have a base understanding of, what are the expected numbers in your market, right? And these numbers are going to actually, they're going to differ pretty dramatically from market to market. And you might be thinking, well, how do I figure out, what this should be cost, what I should budget for in my market? Honestly, my best advice about that is you guys should talk to other agents, talk to other investors in your market, get a feel of what do they underwrite, right? Like how much do they budget in for utilities, maintenance per unit, per month, right? And you can really get a pretty solid idea by just talking to investors and agents in your market. But again, you're gonna have to hammer these down. You wanna have a pretty solid base understanding of what most people think it costs to operate in your market. And then that will allow you to really, really hammer down and really get tight and clear with your specific numbers. The last point I'm gonna hit up about in this video is, let's say you've got all these things lined up, you're starting to underwrite deals. Now it's actually time to go find these deals, source them, and you gotta figure out how to do that, right? And this is good, and here's kind of my advice for you guys on this, right? Especially if you're newer or you don't have a ton of experience, right? Everyone kind of dreams and thinks about the off-market deal, right? Honestly, I'll tell you this, that as a new investor, I personally don't think it's the right avenue, right? Because most of these off-market deals are actually not even that good, right? You have to go through just as much volume on off-market side as you would on MLS listings to find the right property. So that's number one. Number two, even if you do find like a great deal, right? If you're someone new or someone that's going to be financing an owner-occupant loan or someone that just doesn't have experience and doesn't know how to operate and be transactional in real estate, you're actually going to have a pretty hard time closing, right? Because a lot of off-market deals that we closed in the past, and if you talk to any local investors in your market, you got to move quick. You usually have to drop contingencies, right? You really got to know your stuff and you really got to be on top of it, right? So if you've never closed on a property, if you've bought one or two properties, you might not necessarily be ready transactionally to be able to pull something off like that, right? So my advice is always look through MLS listings, right? I mean, I still to this day buy MLS listings or listings that are online, right? Again, you're gonna have to put in the work, right? You're gonna have to go through a lot of listings. A lot of them are gonna be overpriced. A lot of them are not gonna have any price, flexibility. but you're just gonna have to put in that work, but you can definitely find really amazing deals on MLS, right? And for someone that, again, that's new, is using kind of, maybe not clean financing, that is definitely the path. Just put on the hat and start cranking through deals. So that's my best advice for you guys. At a high level, don't waste your time. Don't go too crazy trying to find the off-market unicorn. Chances are someone new, it's just probably not going to happen. So hopefully this video helps, guys. I try to kind of outline at a high level what I would do if I were restarting to try to build up my small multi-portfolio. Those are the exact things I would think about from day one, right? You want to figure out your strategy, your criteria, absolutely huge. Then get your underwriting really honed down. And then you got to just start crunching through deals, right? Start looking at a bunch, sifting through a bunch of inventory online. You got to put in a lot of offers. But if you do this, again, and you map out your strategy within your market, it is very, very doable to build out an amazing portfolio, again, that can produce significant amount of cash flow and equity growth that you might be looking for. So hopefully that's helpful, guys. Of course, if you have any other questions, make sure to put them in the comments below.